We're experiencing so many shifts in such a short span of time that it's hard to get that real-world impact of rapid policy tightening has barely begun. Nasdaq 100 has dragged lower by Apple recently, which has took a 6.1% hit, equivalent to a 120 billion wipeout by Bank of America downgrade. Mr. Zuckerberg, calling an end to an era of rapid growth at the social media giant, outlines job cuts at Meta, and they are not alone. Twitter enacted a hiring freeze in May. Google said it would slow hiring during the back half of the year, and Snap cut 20% of its workforce in August. So there are many headwinds right now, and this is already a history, but the question is what may bring the future. The future might not be very optimistic, as many of those forecasts say. For the present being, it would be best to save your money for rainy days and watch Blockrevision and watch it till the end, as I have a trade idea section for you and something special at the end of the video. So for today, it's 8:45 East time. It's Friday. Let's head into another episode of Blockrevision. And we are starting over with economy view. So what we have right here is the Eurozone inflation at double digit. So we have broken this magical barrier of 10%. And as the history shows that whenever we are hitting a barrier of 10%, it's very unattainable for governments to make it falter entirely for at least 5 years since it started. So it's very, very bothersome gauge. The risks to the inflation outlook even are getting still on the upside, and even if this information may get into nervous to European Central Bank authorities, not forgetting that they voluntarily released that inflation gene of the battle by keeping interest rates too low for too long. So that's the one thing that takes it toll. Bank of England in real trouble. So recently we've seen this spike of Bank of England gilts that are bonds of UK's, and it's the aftermath of recent tax cuts, the biggest tax cuts since 1972. The government's budget plans entailed criticism from the IMF and from the US. So Biden administration is seeking ways to encourage Truss team to dial back its dramatic idea. But can it take place? The question is, what can actually make the bank to change its mind radically? A wide current account deficit fractures relationship with its largest trading partner, Euro area. So those are the cases that led to these problems. So sharper focus on long-standing vulnerabilities shown that the crisis was really years in the making. Every previous governor chose rather to sweep this problem under the carpet and roll it over rather than face it. And unsolved problems tend to pile up. Market functioning is incredibly important because you won't be able to hit any monetary policy goals if the markets are dysfunctioning. So that's definitely that needs to be fixed, but unfortunately taking such measures as Bank of England made was the typical getting backed into the corner situation. United States, as we can find, is proven to be more resilient, as it was their bonds has risen that high, and it maybe didn't brought us that many perturbances as it is on the UK's market. But it's as you can find, the UK's one tend to be prone to more serious injuries when such things happen. So what about the USA? About the USA, we have the dollar. The dollar is impacting its volatility is impacting many areas. Look at this vicious circle. Dollar doom loop is starting from where the lower global trade is impacting worries about global growth. When it eventually gets into fruition, where a strong dollar is gaining its power gradually. Afterwards, we have lower global manufacturing after stronger dollar, and afterwards lower commodity prices. So we are somewhere around those two phases, and as we can find, the strong dollar enhances the US relative growth outlook, which strengthens the dollar, and it is rolling on and on. And on the liquidity side, the strong dollar is a net liquidity tightener, which also favors the dollar in a safe haven bid. So it's a pro-cyclical dynamic. So now, typically, when we enter that phase I've mentioned, typically the things break. Stage the Fed is able to get dovish and stop the move. But why this rendition of the doom loop is more severe right now? The Fed doesn't have its usual off-ramp because they're in a panic mode over US inflation. So we are still not even in the restricted territory on the funds rate. The whole global economy is basically waiting for the US unemployment rate to collapse. Isn't it a paradox that the world is waiting for collapse to make things better? Why governments and central banks are so inefficient in terms of its asset allocation? Share your point of view in the comment section below the video. Amazon hourly wages are up. So what does it mean for the economy? Amazon.com announced a pay increase for hourly workers in the US that it says will take average starting wage for most frontline employees in warehousing and transportation to more than $19 per hour. Keeping up with consumer spending at high level, and this is pushing and supporting the market even further from collapse. So as long as those wages are up, this inflation maybe is not getting into nervous to that extent if the wages were stable. So for now, we don't really see that pain, but we cannot really state that this situation is to last infinitely, as with this inflation speeding up, those wages won't adjust in the every single term. So we also have found that whereas those wages in some of sectors are rising, in other are dropping, or even we are suffering a hiring freeze. So whereas some of the companies hiking wages, another going through hiring freeze, not mentioning the companies announced in the beginning of the video. Among them are Goldman and JP Morgan's, that revenue plummeted by about 60% in its second quarter, limited to hire engineers solely. So those positions are limited to specific sectors where among them there are mainly those engineering projected sites. So what about mortgage rates right now? Because we are facing a real troubles regarding the economy right now, the affordability of buying a house is dropping lower. It was maybe lower back in 1981, but right now affordability is worsening, and that's the spike that is really something to make it even worse. It will be very difficult to get a mortgage if the similar scenario will appear once again. So making affordability matters worse. Home prices are significantly out of the whack with income levels. We now have the highest ratio of home prices to income that we've seen in the past 50 years plus. So definitely this social anxiety may rise with those tensions within economy develop. Porsche eventually goes public. So largest IPO carried out in Europe in terms of the market capitalization of around 78 billion euros is officially out. Porsche's IPO, with its high valuation, is injecting kind of a fresh life into a market for listings that has been shut for most of the year as rising inflation. So interest rates are the threat of a global recession, and that's something that really scared many of market participants. But right now we can find that with this recent IPO, this belief in a market proper and right valuations and performance may eventually get back. So IPO market is one of the indicator of overheating or sentiment that is literally cooled down. Right now, with that low amount of IPOs, we are going through the year where this IPO market is nowhere here from getting interesting for investors, but it may pivot when those market problems fade away. What about market outlook? In terms of market outlook, let's have a look at major indexes. On SPX, we are still sticky to this boundary at 3600s. It means that typically this sell off the highs and no reaction towards the lows means we are more prone to break it down lower rather than upside. So we have filled the gap. The gap recently been formed on 23rd of September, but right now we are approaching the level very difficult for many bulls. That's why I'm becoming more bearish rather than bullish, especially with that we cannot find any type of market bottoming with this pattern alone. We are maybe buying the wicks from here, but this sell pressure still persists, and this filling the gap, maybe not entirely, but this trial filling the gap is something that may be just the continuation of further go downwards. So I do find SPX to have another dummy days weeks ahead before next earnings to appear. So recently we've seen this Apple's earnings revision to the downside, and Apple is the one of the locomotive of the market with its highest valuation in the US market, and that's why whatever happens to Apple, it may happen to the whole US index. That's why those headwinds may persist for longer. Right? So let's get back to crypto outlook. Another section. So right now, Boredom is taking its toll. So that's a chart that shows the sentiment, short-term trader sentiments, and looks as we are right now at the low territory for the most of the time, literally throughout couple of months. So as an explainer, cost of short-term purchases, realized price plus past week to past month forms a strong resistance at 20k on Bitcoin. If BTC would be able to break the level of 20,000, we would like to see a bullish October ahead. So this 20k is definitely some of a threshold that is difficult to break, and as we are standing hanging on longer below this real, it's more likely we'll stick out and eventually get downwards. So the short-term trader sentiment shows that we are very low, but it doesn't mean we won't get another time to such a slide that will possibly coincide with also slides on major US markets. So that's definitely also not very optimistic projection. Right now, let's jump to market mover section and let's get to economic calendar. On Thursday, we had initial jobless claims that is making new lows. So it's definitely something that that is pushing Fed even further with those hiking interest rates decisions. So it's also something that may bring lower valuations to the major markets. And on Thursday we had also GDP month over month from Canada that eventually shown neutral gauging, same as it was back in May. On Friday we had already GDP growth rate out of the Great Britain, and it's at 4.4%. We had inflation rate from France, and it surprisingly was lower than forecasts. So it's better for the France index, market index. Inflation rate of the EA already been published at 10%. Personal spending in the US, it's at 0.4%, and it's also very important, as we can find that the economy still have resilience in order to tackle with this recently deteriorating conditions. So as of next, we are waiting those speeches of Fed representatives, and this week will get done with those important events. On Monday, however, we have S&P Global Manufacturing PMIs from a couple of countries. Among them there is a US, and building permits out of Australia, as well as RBA interest rate decision that's about to get to 0.5%. So that's it from this part. We have, however, started an earnings season, and on Thursday we had Micron, Nike, and Comtech. Today we have Carnival to deliver their point of view on the market. From Micron, it's one of the technological very important companies which stands matters very much, and they have introduced that they are taking decisive steps to reduce the supply growth, including a nearly 50% wafer fab equipment capex cut versus last year, and they expect to emerge from this down cycle well positioned to capitalize on the long-term demand for memory and storage. So Micron is finding that unfortunately the most upcoming days won't be as optimistic as the 2021. So we can find that those growth days are over for now, but we are expecting those stocks to recover. In terms of trade idea, I told you I have something special for you, as this trade idea I think will really get into you. So we are jumping over to DXY. DXY showing an unreal strength that really showing that it's not afraid of anything, and slowly but surely is heading towards 120-ish area. So on DXY we can find that it's definitely not an environment that puts in favor those many growth stocks, and even value stocks will have some troubles. So DXY is the only one safe haven that recently been a best investment among all. In terms of my proposition for today, there is another approach for gold. Gold right now has experienced a kind of a nice squeeze to shake out bears. Right after shaking out bears, there will be very nice opportunity to take a position. As we are right at the end of the week, it means that those are days that are very often becoming a pivotal moments for stocks and different type of assets. So on Friday, I do expect that this chart, this recent pullback to this recent support that became resistance recently, will be the very one that may bring another wave of fall. So in terms of looking for a confluence of different indicators, we can find that right now on the RSI chart we are forming a ceiling based on, maybe I'll just draw it, ceiling on RSI, so it's supposed to be a resistance. In terms of another element, maybe I will erase this one. In terms of another element, we have right here the 50 EMA, that is exponential moving average, that right now we are bouncing right off around this area at 1670s. So it's normally getting us to a conclusion that among all this clarity of a trade is looking very nice. So in terms of trade idea, I would send it with such type of a proposition. So I shown you previously that gold is a very good asset to short right now, with those high interest rates developing even further. So right now I'm maintaining my point of view, and this risk reward ratio is oscillating between 4 points. So we have a support right here at 1570ish, and I do expect that chart won't be able to get over those 1670ish. If it do, we always have an plan B, that is definitely a cut of a position and finding another opportunity somewhere else. So in terms of trading box, inside of which I find this proposition of a trade supposed to have its good days, it's within still 1661 and closer to 1666. If the price will get somewhere, or maybe not that may not become that strict, I will give it a bit wider box that will be limited by 1659 and 1668. If the price will get somewhere over this box, I would find that my proposition won't be actual in terms of my point of view. So better act fast. That's why we are streaming live, in order to have its chance to act fast, and I do find that definitely this is the one of the very nice lucrative option to make a bet. So that's it in today's episode. Thank you very much for watching, and as always, if you have enjoyed, just click the like button and subscribe if you want to be updated. Thank you once again, and see you on Monday, 8:45 East time. Bye bye.